Hi, good afternoon. I'm Christina Henry. I'm with the National Association of Consumer Attorneys, and I'm also a private attorney with Henry DeGraaff and McCormick. The organization represents private attorneys representing consumers on all income spectrums. And I want to emphasize to the committee that student loan issues do affect all incomes, from low income to high income, and also all age groups, from young people to the elderly. In fact, in my practice, I have been amazed at the number of people over 65 and the elderly facing retirement and facing student loan debt. It's a new phenomenon in my office, and I just want to emphasize it so that you are aware that your constituents are not just the young people. And the reason for this is somewhat after 2005, the laws changed that allowed more student loans with more generous or easier guidelines to be given, just as the Senator mentioned, just as a mortgage loan crisis created more loan products in the mortgage area, they also created more loan products in the student loan area. And a lot of those loan products included co-signers. And many of my borrowers and people that I see in my office have co-signers of grandparents, parents, sometimes friends of the family. There's all kinds of issues. And in part because of the recession, you had students graduating from school into a market where they couldn't find a job for a number of years. Or they did find a job, but it was at a lot lower amount than they expected they were going to find, and it wasn't necessarily what their degree prepared them for. And I think it's important to emphasize that most of these students end up in my office, and I'm primarily dealing with them when they've already defaulted on the loans or they can't find the loans, and it's either the parent or the child is dealing with the situation at that point. And it is very, very difficult for me as an attorney to try to understand the morass of the loans. And I'll be short on this, but part of the reason is because you go to school for 2 to 4 years, you take out a new loan every year, usually on a yearly basis, sometimes on a semester basis. It depends, and sometimes it's a different borrower for each year. Now, some of that's changed with the Obama administration for the federal loans. It's a lot more consolidated, but for a number of people, both on the federal side and on the private loan side, our borrowers don't know there's a difference between the two, and they don't know where their lenders are. And there's a lot of things that we can do if we find them and talk to them and counsel them. And hopefully this bill will support that. On the federal side, there's many, many things that can help student loan borrowers. On the private side, I will tell you, it's much harder. But at least this bill gives students a chance to get the information, get the documentation on their loans, find out, hey, which loan is this? I can't even find it, don't know it, don't remember it. I took out a loan with Bank of America. Now I'm getting calls from, different borrowers they've never heard of, and they come into my office. They don't know where it's coming from because each loan got sold off to a different lender. And even though they might have kicked them all out with Bank of America, by the time they go into repayment, it might be with 4, 5, 6, 7 different borrowers. And that confusion also goes to the application of payments. Well, I'm paying Navient. Yeah, but Navient has 10 different loans. And the question is, did you make payments on all 10 loans, or did somehow they get aggregated on only a few? Because when you called up and said, I'm out of work, I can only pay $150 a month, I'm borrowing from my family to get there, did those get allocated to all the loans, or did they only go on 1 or 2, and then all of a sudden you find some others in default? These are just some of the stories, and I'm not going to go through them all, but the ombuds, this bill, Senate Bill 6610, does have the capacity to start unraveling that onion and start getting some more information so that students have some place to go, so that I, as a consumer attorney, have some place to turn to for help. If they go to the Attorney General's office, they have some place to also guide through this. And through this, hopefully, we gain more information that over time it won't be such a mystery.
I do have a question. Thank you, Madam Chair. Thank you for your testimony. I wanted to direct this to Ms. Henry. I took out extensive student loans. They were all federal. They were all Stafford loans at the time. I did not have private loans, so I was not in that world. I'm interested to know, would you say the problems that you see in your practice are, 75% with private loan servicing, or is it, it does sound to me like there are more protections under the federal system these days. I do remember all of my loans being consolidated before I went to law school with, I guess it was with Sally Mae at the time.
Sure.
But it was pretty clear to me. I mean, I was able to track it and really track what was going on. Then part of it was deferred. I mean, it's extremely confusing. Even if you kind of know what you're doing, it's very confusing. If you're,
Well, I will tell you that it happens to both the federal and the private, but at least on the federal side, I can fix it if I can get to the borrower. And because the private side has so many options to help borrowers get back into repayment if they've fallen behind and they've lost the loan, consolidate, and so forth. One of the big issues on the federal
on the federal side.
On the federal side.
Yeah.
On the federal side, one of the big issues is a lot of borrowers go into forbearance when they're out of work, unable to pay. We want them to be in repayment programs under the federal program. There's so many great programs that are based on your income, either 10% or 15% of your income, that will eventually be tracking years to actually finish the payment. Whereas forbearance is just growing and capitalizing with no end in sight, and it can get to a point where it gets out of hand. So it's not where we want borrowers in, but it tends to be the default of where the borrowers are. On the private side, it is just a whole different set of mess. It's the best I can tell you. And it's not easy to navigate how to fix them. And we're trying different tactics all the time, but there is no good one yet.
Just a question for any of you that, one of the things that I've seen in K-12, principally in high school, a real lack of understanding being taught about just financial management in a general sense. What it means to have a credit card,
Right.
What it means to have a bank account, how do you write a check?
Right.
Most people don't write checks anymore, but what it means to sign on the dotted line. Did any of you get any counseling anywhere along the line that taught you about what you were going to incur when you signed on the dotted line?
I can answer that. So like I said, I recently took on new federal loans, and those loans require that you go through a training, an online training, and we know how good online training can be. Luckily, I was fine there, but you had to take little quizzes as you're going through this training to understand the implications. What if you knew what the terminology was, because a lot of the components of a contract are legally, that people just don't understand. So making sure that people do understand that. On the private side, I don't believe that those exist as strongly as they do on the federal side.
And I just want to add that many of the people that we talk to across the state, for them, it's their first time. They're the first in their family to go to university. Oftentimes, their parents are either didn't graduate from high school or just have a high school degree, and they don't know how to navigate filling out federal forms such as FAFSA, so that could be incredibly daunting. And some people also tell us that they've been misled, or that they didn't see the fine print, that they didn't understand that in some of those private loans that they could be penalized if they pay more towards their principal, because that's the way some of those loans are written. And I think that there are different variables, but I think a lot of it is just not knowing how to navigate the systems, and also understanding that a lot of these loans, they'll harass and hound you and garnish your wages. I mean, and especially with the private loans, they'll even go after your cosigner. Some people don't understand what it means to be a cosigner, so we hear all sorts of stories.
I would also say that things may have changed a bit for the better since the Consumer Financial Protection Bureau has been involved in the student loan arena and has changed some of the disclosures. So a lot of what I'm seeing is loans that are a little bit older before those disclosures went in. And I will tell you, Senator, try as they might to have understood what they were signing when they did the application, it's almost impossible. Because when they signed up for the application of the student loans, there is no interest rate on the private loan side. You're told that this is how much it costs to go to school, this is how much that you should be able, this is how much it is to do this education. I've had borrowers that some of the schools have also had a rosier picture about what it's like for your income when you graduate from these schools. But then when you get the disclosure that comes in, it's in a very fine print as to what the interest rate was, and you had 5 days to either determine you were going to turn back the check or not. And it's either that or you don't attend school. So those disclosures actually oftentimes don't come until the loan has been funded and they come with the insurance rate. Now, like I said, it has changed a bit for the better, but it's been hard. And it'd be hard also for higher education institutions to counsel students, in part because a lot of the private loan side, at least, didn't always go through approval through the public schools, so they weren't even aware to do the counseling. And hopefully this ombudsman and the bill will start unraveling the issues, and once we have more concrete information, we can tailor it as we go as to what the best way to educate the future students is.
Thank you very much. Senator Becker.
Thank you, Madam Chair. Well, I'm sitting here and I'm thinking about how this is so similar to when home loans used to be sold and how that plays out. But I thought that we had laws in place, and I know even on a credit card, they'll update you with your credit, with the percentage rate constantly. What is your percentage rate? And it takes you X amount of time to pay that off. Are you telling us that on a private loan in Washington State that they will never inform them, or they do not inform them?
Well,
The amount of the interest rate?
I am going to have the caveat that I know there's been some changes with the CFPB and disclosures and the new loans, so I think it's much better. So the ones that I'm seeing are older. What ends up happening is there is some information about the student loan note and what they're actually doing, but they don't actually sign the note when they get the check. They sign it at the application time when there is no information about the interest rate. And like I said, that may have changed somewhat. And then you're going to school for 4 years not paying. So I don't believe that they're receiving monthly information while their student loan is changing with the LIBOR every month and adjusting along the way. And then, of course, student loans that are private, at least, and we're talking about private as opposed to federal. Federal is a much different beast. During that time, it's capitalizing. No one's paying that interest. And I see loans regularly on the private side at 12 to 15% interest. So if you go through 4 years of college and then you're 3 years in a forbearance period trying to get a job and on your feet and you're communicating with a student loan lender, 7 years out, I've seen those principal loan balances double and triple before they even make the first payment.
Probably higher than the actual loan.
And that's
If I could just
what we're dealing
We've got
with.
7 more people.
Okay, just one more
Sorry.
quick question to you. You said about the prepayment, you can't do a prepayment without a penalty? Is that true?
Yeah, so as someone who has taken out private loans, I have I had $30,000 in private loans. I had about of unemployment for 7 months, and they would only give me a forbearance of 3 months, and I tried calling them multiple times to lower my interest rates. My interest rates were hovering close to 7% on my student loans, whereas like my counterparts who had federal loans were much lower. And it's been just a nightmare dealing with the company because they refuse to lower the interest rates. And also, in my situation, I could pay more towards the principal, but I've heard that other private loans will, servicers will penalize you, yes. But that's all in the private world, and that's my experience is just strictly in the private world because I wasn't eligible for financial aid at the time when I went to school.
Thank you very much. I could sit and ask a lot more questions, but we have 7 more people who want to come up and give their stories, and I greatly appreciate